Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday the 31st, and the year is wrapped up here. So let's take a look at the numbers. These are the raw numbers, no dividends included. So the actual full return is a little bit higher for the ETFs that do pay a dividend, such as the S&P 500. But just another spectacular year for equities. Biotech's just squeaked in with a positive gain. Look at the oil stocks up 62%. Actually, that's the oil ETF. Not the oil stocks. Oil stocks XLE were up 46%. Volatility dropped off this year, down 72%. But just another great year for the bulls. It wasn't easy. It never is. You know, when we look back in hindsight at these big numbers, you think that, it was an easy year. But again, it never is. We had some pretty good pullbacks. We did maintain pretty much above the year-to-date volume-weighted average price all year, except for a couple of occasions down here earlier in the year. But then once we bounced off it here in March, the buyers regained control, and just this recent pullback came together at the volume-weighted average price from the September low and the August high. So we're going to continue, obviously, into the new year to keep an eye on all of these important volume-weighted average price levels. If you follow me on Twitter, I tweeted throughout the week the week-to-date volume-weighted average price. That on Monday, we anchor it from there, and then we kept testing it and finding buyers over and over again Monday through Wednesday. Then on Thursday it fell through that, and that level of support then became resistance here today. So basic technical analysis: support broken tends to act as resistance, and it happened here with that volume weighted average price. I'm not making any grand projections for next year. We're in an uptrend. I think it's innocent till proven guilty on the longer term time frame. On an intermediate term time frame going into next week, I want to see if we stay stuck under this 5-day moving average, and if that's the case, we might pull back and test the volume weighted average price from the little shakeout low that we saw 2 weeks ago that is on the 20th. That would bring it down towards about 468, 469, and that would also bring us to approximately where the 20-day moving average is heading up to, as well as the 50-day moving average. That 50-day moving average is still rising. It's innocent till proven guilty. Yes, the volume was light the last week and a half, but only price pays. You can look at that and make note that it was up on light volume, but it's not going to change the results. 27% or whatever it was for the S&P 500 is still 27%, regardless of how much volume traded to get there. Our job is simply to ride the trends for the time frame that we're most interested in and comfortable holding, and to manage risks so we don't let those profits get away from us. The NASDAQ, this is a sketch of what I've been telling subscribers to Alphatrends that I wanted to see happen as we broke this resistance. I wanted to see it pull back, and that's exactly what we're getting. This is what I'd sketched out basically last night, that hopefully we could come down, test this volume weighted average price or even the VWAP from the 20th, and then start to move back up into this range, get back above the 5-day moving average next week, and then perhaps we could see a push to new all-time highs. Otherwise, for now, just a little bit cautious because it's below declining 5-day moving average. Same game plan as always. Nothing changes just because the calendar changes. I think that's absolutely foolish to try to think that way. We only get paid on price, so we want to maintain focused on price action. Speaking of Alphatrends, I don't talk about it. I almost never talk about the subscription that I have, but I do have a sale going on, a New Year's sale for $799. You get 12 months of the Alphatrends premium subscription, which is 3 videos a day. One right at the end of the day where we cover all the indexes. That takes about 5 minutes generally. And then the second video is about a 10-minute video where I go in detail over individual stock ideas Sunday through Thursday night, and follow up on the ones that are open. So specific entry suggestions and risk management, and then a midday video each day at about 11 a.m. Eastern. That's generally about a 4 or 5 minute video. So I can get a lot of talking into 4 or 5 minutes rather than doing a post. You also get the January effects list that I'm putting together. That's, I'm valuing it at $59, basically because you could get that for a $59 2-week trial to Alphatrends. I've got an introductory course that's included in that $7.99, and the advanced course, which is about 15 hours in quizzes, that's $499. It's included in the $799. I'm going to give you a one-on-one webinar with me for 30 minutes, undivided attention, and two additional educational webinars. I do webinars for subscribers every other Monday, and in those webinars we answer all the questions, look at the stocks you guys want to look at. But the educational webinars are going to be so that everyone can be on the same page early on in the year after going through that advanced course. Again, this is a total value of $2,100. It saves 62%, $1,300, and it's good through January 15th. The sign up is listed on alphatrends.net on the homepage. I'll also put it in the video link here on YouTube. Russell 2000, this market, what a waste of time this was. We had that breakout. I had warned several times that previous breakouts had failed to hold, and I wasn't calling for that to happen. But as soon as we saw the Russell 2000 get back below that 5-day moving average, that's when it turned in here. This is when I turned cautious and then stayed cautious this whole way down. We're right at the volume weighted average price from that peak, but we're also right at the year-to-date volume weighted average price, saying that the average price that this market traded at basically break even if you're a buy and hold investor, and which is kind of interesting because that's also the case for Bitcoin. Bitcoin, here's a year-to-date volume weighted average price, that orange line, and we're basically right on it right here, right now. So that means the average price paid for Bitcoin is right here. The average participant, long and short, is about break even. Doesn't mean there weren't great opportunities to trade, and this is why I trade Bitcoin. If we see this level fail, be aware that it could lead to a sell-off down towards the volume weighted average price from the breakout back in August of 2020. That would bring you down to about $38,000, and then the volume weighted average price from the 2020 low would bring it back down to test the lows that it saw, from this pullback this year. So that's a look at Bitcoin for you. But again, the Russell 2000, what a waste of time that was. It's kind of like, I think the biggest time waster that I saw people talking about all year was Palantir. Anyways, semiconductors were the clear leaders this year for technology, and the driving factor in a lot of the big stock moves. They have found recently buyers at the volume weighted average price from that September pullback low. We're also above a rising 20 and 50-day moving average on the daily time frame. So overall, it's innocent until proven guilty. Just a little bit of caution next week because we're below the 5-day moving average, and we'll be getting rid of this data right here. That means as long as we stay, basically under this level, that 5-day moving average will continue to decline. And if we get trapped under that, it might lead to a deeper decline. Maybe this volume weighted average price near 305, or perhaps all the way down in towards that 50-day moving average again. So just a little bit of caution. Early in the year, we tend to see some volatility the first few days. It really doesn't mean much, and then the market kind of picks its direction, very similar to the way the market moves after a Federal Reserve meeting. The biotechs, as I mentioned, they just squeaked in with a positive gain for the year, but they were below the declining 50-day moving average, and right now they're kind of pinching between the 20 and 50, telling us that this market is a waste of time. We've got a declining 50-day moving average. We've got a declining 200-day and year-to-date volume-weighted average price. You back it up to the weekly time frame. It's good to see that this volume-weighted average price off the 2020 low did find buyers, as it had last year on 2 occasions, and then again earlier this year. But again, it's a waste of time. Why bother with it? Financial stocks stuck below the 50-day moving average that's declining. This is where we were 50 days ago. So next week we get rid of this data, which means if it doesn't start to rally, this market will then start to get trapped below that declining 50-day moving average because we're averaging this out. The 20-day moving average is advancing, so we have mixed messages on multiple time frames. We don't have trend alignment, and when we don't have trend alignment, it tells us a very clear message. Mixed messages, which means basically avoid. Energy names also stuck below that 50-day moving average, and we'll be getting rid of this data next week, which will should keep a lid on that. If we can, jump back above the 50-day moving average and hold above it, it turns them more neutral. But near term, I think you've got to be cautious with them. I'm going to end this video here. I'm not going to give you any stock ideas today. Maybe I do over the weekend. I don't know. But if you subscribe to Alphatrends, you're going to get plenty of ideas including that January effect list. Thanks for tuning in. I hope you had a good year and 2020 is even better for you.